Hello, everybody. This is Michael DeJoy with the Dash Trader Newsroom. Interest rates stay the same once again. What's in store for the markets as the United States and China start trade talks? My name, as I already mentioned, is Michael DeJoy with Dash Trader, Director of Educational Services, joined by my co-host, Jill Molandrino, Global Markets Reporter with Nasdaq. Jill, how are you?
Doing well, Mike. Doing well.
Before you take off on your travels,
Yes.
tell me what's going on with the interest rates. Federal Reserve has held interest rates the same yet again. Fed Chairman Powell says there's no preemptive rate cuts in store due to trade tariffs. He's going to wait and see and react accordingly. What are your thoughts on interest rates, tariffs? What's going
Well,
on with the Reserve?
Mike, it's interesting. We did a number of segments on it this week, and the general consensus has been with the strategists that have been on my show, whether market strategists or I've had a number of tax policy strategists on the show as well discussing fiscal policy. The challenge is with the market and the Fed, and I honestly don't think the reaction was, quite as volatile as perhaps would be expected. The market, the administration wants the Fed to do one thing, but the Fed is going to do what the Fed is going to do based on the data that it sees. And it has been very clear in articulating that. For all intents and purposes, our economy is still showing strong numbers. Employment hasn't, moved down. Consumer remains strong. The question is, has a lot of purchasing been moved forward because of anticipated tariffs? But, as of right now, there's no reason for the Fed to cut, because should they need to, they don't want to have tools not at their disposal if we were to, enter a downturn. So, um, you know, I think because other areas of the world, like Europe in particular, are continuing to make cuts, there's a reason why their economy is going through different stresses than ours is. Ours isn't showing a breakdown yet, if it will at all. So I
Yeah.
don't think the market should be too surprised. It might not get what it wants, but it certainly should not be surprised.
Yeah. I mean, what do you expect out of these trade talks between the US and China? So, the market reacted positively to them. I mean, do you expect anything significant out of them? I mean, a lot of the bite has been taken out of them already, at least for the short term.
Right. So there's a number of scenarios that are being set up here. I would say the mean of what we have been hearing is you're not going to get the super high double 145s, 50% and so forth. That it'll probably be around that 10% number, which is what we saw with the UK today. So the question is, did we have to go through all this drama and all this noise to get to where we're going to be anyway? Um, you know, I I am not a deal maker. I don't understand the tactics or the nuances as well. But I feel as if the market doesn't get anything as bad as it thought it would. And I think you're starting to see that priced in a bit at this point. I mean, we are essentially, I don't know. I mean, stocks are rallying off of trade optimism. I think we're close to where we were on
Yeah.
Liberation Day, or we've round tripped already. And again, it's just about in a month's time. It's not as if this has been prolonged. And there's a couple of things here. You know what? The Band-Aid got ripped off initially in the beginning versus having to have that conversation around, oh, when is Trump going to start having tariff talks? We saw it happen in 1.0, where it didn't happen until 2 years in. Market dumped 20% in December 2018. So we kind of got that uncertainty out of the way, if that makes any sense. I think the longer term implications are how trade deals look going forward, and ultimately how the dominoes fall as it relates to the supply chain. And even before Trump came into office, companies were looking to realign their supply chains anyway. So
Hmm.
there's a lot of optimism in the market today. Certainly the UK trade deal helped, um, but it doesn't feel, as volatile as it did perhaps a week or two ago.
Yeah, I mean, look, so I mean, obviously, the U.S. makes its first trade deal with the UK, right? So, reciprocal tariff, since this whole pause started, it's not surprising as the UK and the U.S. have been consistent, staunch allies, pretty much since the 19th century. I mean, it's not surprising that. Do you really think that China will have a near 10% tariff deal based on the volume. And really, if you think of anybody that this whole gambit was directed at, it was directed at China. I mean, this, at least to me, seems like most of the U.S. trade imbalance, not unlike, I mean, you go back 2,000 years to ancient Rome. Ancient Rome had a trade imbalance with China. I mean, the United States has a trade imbalance with China. I mean, it seems like this is, I'm a student of history, but it seems like history is repeating itself, that China has been the target of this. Um,
Yeah.
I would think it's going to be more than the UK or the EU or something.
Well, it's interesting because we got the deficit numbers this week, and because of the demand that was pulled forward in anticipation of tariffs, the deficit only widened, which of course the administration doesn't want to see that. I think what's interesting with the U.S. and the U.K. deal, and you succinctly made the point, is because of our allied history, that's pretty significant. Not to demean any other country, but I think if it was a smaller country, let's call it, Southeast Asia, or in a place that we don't have that historical relationship with, it might not have resonated as much. And, US,
Mm-hmm.
UK, US, Canada, those, we're kind of all made of the same cloth there. What's interesting is, besides the allied nature of our relationship, this announcement provided a political victory for the UK Prime Minister Starmer, who has not had an easy time at all since for quite some time. And I think this offered him a degree of validation. And I think this also offers Trump's claims that this turbulent approach on trade may be able to rebalance the global economy on his preferred terms. So,
Mm-hmm.
and but on the flip side of that, it could also temper expectations of the EU and others negotiating with the US that mutually slashing tariffs to zero is not going to happen, considering we kept the 10% rate with the
Yeah.
UK. So it
Yeah.
balances itself, fine. If it's going to be 10% versus 10%, fine. 15% versus 15%, fine. However, that tariff has to be paid by someone somewhere. Now,
Yeah.
10% companies can most likely comfortably absorb. Beyond that, then you
Yeah.
start, okay, this is a tax on the consumer. So that's, I think, where the variable is right now.
I think you said something that really identifies what's going on, is that, precedents, as you know, as a law student, are extremely important. And there is I mean, look, the United States and the UK even have the same colors on their flag, for goodness sake, right? I mean, you
Yes.
don't get any closer of a relationship than the United States and the UK. We were a former UK colony. I was laughing when they were offering the United States kind of like a special role in the Commonwealth not too long ago.
Mhm.
Um, I think Prince Charles had wrote him a letter, Donald Trump a letter, that they were going to have some kind of special role in the Commonwealth. Needless to say, I think that this is a precedent that's being set. That it's going to be a minimum of 10% tariffs. That everybody else, as you get further and further apart, you can expect further and further percentages. But so I think that that's a very, very important point. And then I guess the next thing is to see who gets the next deal, right? Since this is the first deal, this sets the precedent. It's the country that we most closely identify with in the United States, and then we'll see where it proceeds from there. Which brings me to my next topic and talking point. The world seems to be settling in after tariff mayhem in April. But we've seen that Bitcoin has reemerged to above 100,000 for the first time since February. Gold continues to remain at all-time highs, in and about that 35 to $3,500 an ounce level. The question is gold versus digital gold, or both? I mean, the one thing that we can certainly be certain of is that there's probably going to be a repositioning and rebalancing of currencies internationally on the sovereign level. What do you see ahead for both physical gold,
Mhm.
Bitcoin, Ethereum, cryptocurrencies, and of course their inverse, the U.S. dollar, right? Because obviously, gold is inverse the U.S. dollar, and Crypto, I wouldn't say it's inverse, but it certainly has a relationship to technology. What are your thoughts on all these?
There's so much going on there. And Mike, I will certainly have some great feedback as we're going to be in consensus next week in Toronto, which is one of the largest, if not the largest, digital asset market structure and policy conferences around the entire ecosystem. So we will have a ton of feedback on those questions that you answered, as well as the integration of traditional and decentralized finance, where we are with policy. I mean, if you look at the digital asset markets today, the crypto markets today, never mind just Bitcoin, but some of the a number of the other coins are certainly outpacing as I'm looking at the equity markets now, significantly. They're outperforming. I think what's interesting during this pocket of volatility, you didn't see that correlation that you typically see with Bitcoin as an example to the Nasdaq 100. It held up in a less
Bitcoin held
volatile
up phenomenally well.
Right.
Not
So
the normal tech correlation. I don't like to call them shit coins, but some of the shit coins certainly
right.
took a tumble, but then recouped.
So and it's not even just Bitcoin because of the positive vibes around getting digital asset federal structure. I had a really interesting interview last week with the former House Financial Services Committee Chairman Patrick McHenry. He's pretty bullish on the fact that we will have some framework in the next few weeks over the summer. That's a pretty substantial statement to make on the show. So you're starting to hear about the regulatory framework. You're really starting to hear about the benefits of stablecoin, not just within the community, but within governments, our government itself, the tokenization of real world assets and the growth there. And we can talk about all these products, Mike, but until we get that regulatory framework in place, that's the catalyst. That's when you see stuff happen at scale.
Yeah.
We don't need another ETF. We don't need, of course we need the innovation. We can't stop doing that. But in order to understand what the operating guardrails look like, and we're not regulating by enforcement, once we get that clarity, that's when these things happen at scale and become ubiquitous within the financial system.
That's a very good point. And we also saw, I don't know if you have any comments. We saw that I think it's the state of New Hampshire came out and allowed the state to actually purchase cryptocurrency. I think it was the first, New Hampshire likes to say it's the first in caucuses, and it was one of the first states. Any comments on New Hampshire saying that they, will allow the state to actually build up a cryptocurrency? I guess it's a treasury, right?
Yeah, I don't know as much about that one as I do with some other states that are looking to implement Bitcoin in a significant way, Wyoming being one of them. And I'm going to be meeting with their contingent next week at Consensus as well. They've been really proactive in getting this type of structure in place. So I think, again, this is all happening on a jurisdictional and state level. And that's the more variables and fragmentation that you put into place, the more challenging it becomes. And while like we have, SEC framework as an example, Exchange Act of 1934, which governs our business, each state, there's a number of regulators, banking regulators and so forth, that also, have regulations that we have to abide by. So I really think once we get this framework in place and see how the states react off of that, that's going to be interesting. Because I think there is hesitation, not I think, but there is hesitation because you don't want to put businesses or frameworks or investing in your treasury out there and then find out that you can't do XYZ.
Yeah, the federal government just overruled you. Yeah.
Right.
That makes total sense.
Yeah.
Well, excellent as always, Jill. Can't wait to hear the news when you get back, and safe travels as always.
All right. See you guys soon. Take care. Bye.
Thank you, Jill. All right, so let's jump right in and talk a little bit about the markets. I have my dash trader up here. Getting a little bit of selling here in Google at the end of the day, but let's just see then and in the Nasdaq as well. Let's take a look at the market. So we have pretty much come to 50% retracement level on the Nasdaq 100 QQQ. We are kind of at the resistance before the secondary sell-off, of the markets, right before the beginning of April. So Nasdaq has pretty much recovered the initial sell-off. And this is important to note that the QQQ, which represents the Nasdaq 100, is up above both of its major moving averages, the 10 and the 20 moving average. Let's take a look at the SPY. SPY above the 10 and the 20 period moving average as well. We have the DIA also above the 10 and the 20 period moving average. So the markets have pretty much recovered from the Liberation Day sell-off that occurred in the beginning of April. Now what we're seeing is, let's take a look at GLD, gold, selling off quite a bit, which not surprising. It did make a tremendous run. So gold pulling back a little bit as the market strengthening. Usually gold reverses. GBTC, which is Bitcoin, not correlating. So Bitcoin continuing to break out and go higher as gold is selling off. So that's showing that the move of capital to cryptocurrencies, and obviously the kind of the panic or fear, which is gold. We usually call that the fear indicator. The fear of, systemic breakdown has kind of subsided. Now let's just take a look at some of the Magnificent Seven stocks. We have Apple. Apple has pulled back, but it's certainly off its lows and way off its high. Amazon, showing signs of bottoming, and that makes a lot of sense because a lot of the products that people buy on Amazon come from China. So trade talks with China are certainly helping Amazon. MSFT, I think Bill Gates and Microsoft had a pretty strong earnings report, and Bill Gates has announced that he's giving away most of his fortune, which is an interesting one as well. And a side note, I'm sure it's going to have some strings attached there, as I'm sure everybody's gotten familiar with over time. Let's see the next one. We got Microsoft. We have NFLX. Netflix, which I would say is the new Hollywood, still up there at all-time highs. Incredible recovery on Netflix. NVDA, also up on those China talks. NVIDIA, the semiconductor company, certainly having a lot of interaction with China. Let's see, Tesla. Tesla also looking to be moving to the upside, as, also has a big exposure to China and has certainly recovered quite a bit from its lows, but has a lot of upside potential in the future if things, move positively in that direction. So on that note, we have taken a look at all of the big players here. Let's see. Let's jump right ahead and wrap things up. So that's it for market analysis. Stay up to date with all things DAS and sign up for our monthly newsletter. Fill out the form at the bottom of the webpage. Subscribe to our YouTube channel, DAS Trader TV, and our DAS Newsroom reminders. Follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. And also, stay tuned for the next #1 Best Trader competition coming up this October. It's going to be a big one, so definitely start practicing. And see you next time. Trade well, everybody.